Everyone is so consumed and so focused on Solvency II right now that IFRS hasn't got the attention it deserves.
IFRS is International Financial Reporting Standards. Currently it is called Phase 1, which is preserving the old existing accounting system, which is different from country to country. That's why ISB is trying to establish a real IFRS for insurance contracts.
As a company, Royal London prepares its financial statements in accordance with International Financial Reporting Standards, or IFRS, but the accounting standards we use to report the results of our insurance business are not the long-term solution that I think we need to harmonise financial reporting for insurance around the world.
IFRS 4 is an international standard, which means that while we have now all these local accounting practices for insurance contracts, which are very different between Europe, Asia and the Americas, there will be now a uniform standard worldwide.
It's fundamentally a risk-based system. It's all about trying to understand and capture and quantify the risks that each individual insurer is facing. It's going to be pretty revolutionary in terms of the impact it's going to have on insurers' financial reporting.
We see a lot of Japanese companies changing to adopt IFRS.
The way reporting is going to happen is going to get changed completely. In the Indian market, the government has recently passed a bill to increase the foreign direct investment limit in insurance sector from 26% to 49%. Obviously, there will be other regulatory changes. In time to come, the Indian insurance companies will need to adopt IFRS.
The move towards greater risk awareness is a huge change. The pace of change is something that companies are going to struggle to keep up with.
The ISB has decided that the change in the current value of your insurance portfolio should be split in several components, and each component should be treated differently. Companies will have to increase the computational speed of their models.
IFRS will be exceptionally computationally intensive because it is so elegant intellectually. The reality is there are very, very difficult implementation challenges.
The way reporting is going to happen is going to get changed completely. I think the actual consultants like us would be able to play a key role.
It's perhaps somewhat contradictory or somewhat curious because we're talking here about an accounting standard, but actually I think it's going to have a huge amount of actuarial input, maybe even more actuarial input than accounting input in terms of how companies will have to set themselves up to be able to report on the new IFRS basis.